May tested both sides of the market. Gold pulled back under pressure from yields and the dollar, while Bitcoin tried to rebuild momentum through ETF inflows. At the same time, real-world assets continue moving deeper into institutional finance, which we have all been long expecting. Let's look at what this month meant for us, Ayni Gold, and let's get into it. This is the Ayni Gold May update. I'm Daniel Tschinkel, CTO at the company. Let's get into it. First of all, as always, we have the macro outlook of gold. So let's analyze that, what happened this month. Gold has been holding around the high 4,000s through the end of April, but May itself had a bit more of a difficulty in the month in terms of price movement. By mid-May, spot gold was trading around 4,500 as higher US Treasury yields, a stronger dollar, and a more patient Fed outlook put quite the pressure on the markets, and you could feel that. The short-term setup was quite heavy, in my opinion, because the US 10-year yield moved near one-year highs, so the inflation concerns stayed quite elevated, and the expectations on the rate cuts, they have been again pushed back even further out. So for gold, this matters because higher yields increase the opportunity costs of holding an asset that doesn't actually pay interest, which is very important, also for our project, of course. At the same time, the bigger picture remains quite constructive, I would say, because Reuters has reported in May that major brokerages were still broadly quite bullish on gold. The same goes for JP Morgan. They have said that, well, they have cut their prediction, to be honest, to 5,200 around per ounce, but we're still expecting for gold to move high to the 6,000 by end of the year. ANZ end target was around 5,600. So all the major banks, Goldman Sachs, Deutsche Bank, UBS, Wells Fargo, they all continue to publish target expectations from between 5,000 to low 6,000 range. So this is the approximation. And to be honest, I'm really looking forward to all this kind of bullish momentum because central bank demand has stayed quite important as well. And this is very crucial. According to the World Council, the central banks have been estimated to be accumulating around 250 tons of gold just in Q1 of 26. And that is way above the previous quarter of the 5-year average. So this buying is still being driven by reserve diversification and by the need to hold assets outside of the standard dollar system. So overall, I would say May was a consolidation month for gold. Price moved lower, but the long-term case remained tied to the same forces: central bank buying, inflation, uncertainty, reserve diversification, and in search for an asset that can hold value through a more unstable macro cycle, I would say. Now, let's move over. Of course, as always, the next point is our Bitcoin. Bitcoin had a stronger start in May. After recovering through April, BTC moved back above the 80,000 in early May for the first time, I think, since January. And this has helped by renewed demand from the Bitcoin ETFs on US spot that you could see. ETF inflows were the main story on that. So according to CoinDesk data, US spot Bitcoin ETFs recorded 2 consecutive months of net inflows with around 3.3 billion of flowing in over that period. So early May also opened with a strong single-day inflow for more than 600 million in a session. So that's quite substantial. And the rebound showed that institutional demand has returned, although the market was still rebuilding after a difficult stretch. So from November 25 through February 2026, Bitcoin ETFs saw more than 6 billion in outflows. So that explains also the price, of course. But by early May, cumulative ETF inflows were still above the October peak. So the recovery was real, but it's still developing. And price action reflected the same mood, I would say. So Bitcoin moved back into the 80,000 area, but a lot of traders were, of course, still cautious around the next leg that can go higher. But the market had momentum from ETF demand, while I think the broader risk appetite remained quite sensitive to the rates, the yields, the macro headlines, the bear market. So May gave us a clean picture of where crypto stood. And liquidity was coming back through ETFs, but conviction was still catching up. And I think we can see that right now, because as of shooting this video, the price action has moved differently. Because while we're recording now, we can see pressure again. So we will need to see where this is going to head next. And it will be quite important. Now, next part of our journey, of course, is always the real world assets, which we are part of, staying in the crypto side. The Clarity Act has advanced through the Senate Banking Committee in May. And this was very crucial because the bill has now passed there and it moves closer to the Senate floor. This matters for tokenization assets because the market still needs clearer rules, defined rules around digital commodities, securities, the custody, the trading, how it's going to be settled. And larger institutions can't really experiment without perfect regulation. But the scale of what they need for legal frameworks to become easier, it is quite necessary. So the RWA market data kept moving in the same direction. We're now seeing by more than 26 billion in tokenized real-world assets on-chain, up to around 6.5 billion or 6.6 billion a year earlier. So the main categories remain tokenized treasuries, private credit, institutional funds, and commodity-linked products like ours. So this category is actually becoming more practical. And I think asset managers, banks, regulators, and all the blockchain platforms are now discussing the same rails, like the issuance, how can we transfer, how can we settle, what's the compliance around it, and the reporting. These are all important topics to discuss. So tokenized gold sits inside that larger move, I would say, towards asset-backed digital finance, where the users are looking for exposure to real economics and transparent on-chain from the settlement side. So yeah, this is quite detrimental. And now onto our next part, we cover everything taking place in our gold mine, always at our concession. In May, the concession focused mainly on the throughput and the movement and recovery and efficiency. So the team has been optimized the sluice angle to improve the gold recovery during the processing. Even small changes in the slope of the sluice can make a real difference, because you have to imagine that the material, as it passes through, depending on which angle it passes through, the faster it passes through, the less it can capture. So the more steep it is worse. So the more inclined it is, that it is more horizontally, the easier it gets to filter out the grain. The team has also built a truck passing zone near the sand loading area, which is making movement around the extraction and loading point more efficient. This truck circulation is basically one of the places where bottlenecks can slow down the whole line. And if you have seen our videos from when I was on the side, you will understand exactly what I mean. So in case you haven't seen it, it is on our YouTube channel, and it's kind of like a mini documentary at the concession. And it's really worth watching. And then you will see exactly what I'm talking about. So additionally, we have brought 2 additional dump trucks into operation on the line. So with more trucks, of course, moving material, the site can support a higher and more consistent flow into the processing. Taken together, that these updates are about making the concession work better as a whole system, with more room, more ability to move, more hauling capacity, and improve it. We want to improve basically the recovery of gold. This is the main target of this. Our next section is, of course, everything around our Ayni app. This month was about optimization and fixes across the platform, but the bigger news sits underneath of that. We have finalized development of our newest features, which are the gold units. This one took serious effort to build, and we are generally looking forward to make it available to everyone. Users will be able to purchase gold units directly in the official shop inside the app. So inside the app, you will find it and you will see how it looks like. They will also be able to list them on the marketplace. So this is quite important because flexibility matters to us. So some users prefer staking their tokens, while others would rather not lock them up. So the gold unit gives the second group a real alternative, a way to participate without committing to a locked staking position. And we want to keep both the best side, the positive of both worlds. So we will release also a separate video walking through everybody exactly how gold units work, so you can get the whole picture. And there is one milestone also worth highlighting. According to our on-chain data, Ayni Gold has now paid out more than $200,000 in PAXG to users since launch. And that number is of course verifiable on-chain. You can check it out for yourself at the link. And as always, what I say, don't trust, verify. And I think this was a very good and important milestone for us. Now next, let's head over to our community. The remains, of course, one of the most important parts for Ayni Gold, because the protocol is built around transparency, education, and direct access to the team. We want to provide basically the people have to be able to understand what is happening on the gold market, what is happening at the concession, how the protocol connects, all of those pieces together basically on chain. So this month we are launching a new series on of activities basically on X, where you will be able to predict the price of gold and get a share of a prize pool. So I think this will be quite exciting, and maybe I will also jump into the guessing myself. Gold has been moving through a very interesting macro environment these past weeks. So these activities are just a simple way to test your market view, follow the price action more closely, and compete with the rest of the community. We're also continuing our Discord activities. So this is very important. If you have not joined yet our Discord channel, make sure to come in, always welcome. And because for us, Discord is also where you can ask team questions. You're able to follow up on wiki updates, join Ayni Gold quizzes, participate. We have also community events there, and you can win some awesome prizes. So keep an eye on the X channel, our Telegram group, and also Discord for all of these activities. Now let's head over to the questions from the community. We have question number 1. You often mention the real cash flow that Ayni Gold brings on-chain. What is the data behind that? Excellent question. We have, of course, the data behind that, because Ayni Gold is connected to a licensed gold mining operations through Minerales San Hilario, which is in Peru. And Minerales San Hilario is a registered company licensed in Peru itself. So the concession has a legality there. And you can verify that very simply by going to our website at any time. And you will find there also the official link that links to the government website of Peru, where you can verify it, that the concessions and the numbers, everything that is there. So the cash flow we talk about comes from mined gold sales. And in its first year, Minerales San Hilario has generated over 2 million in revenue from gold production and sales. And that is the real economic activity, basically. So Ayni Gold is basically opening access to this through on-chain settlement. This is the key difference on how the model should be understood. And Ayni is not built around abstract token emissions. And this is very important to make that clear. The protocol is connected to real-world mining operations, and the on-chain layer is of how users are able to access that economic activity through our platform, basically. Now let's head to question number 2. You're planning a partner or referral program that you can invite friends to. That's a great question. Of course we are. Yes, this is also an important part of our roadmap and of our marketing plan. And we're absolutely planning to use referrals as a major growth lever. Right now, we're building the mechanism behind it, and we're preparing the integration into the app. So the goal is to make referrals as simple as possible, trackable, and useful for people who want to improve and their own position, but also introduce Ayni to their network, of course. So if you want to earn bonuses right now, or if you have already some ideas that bring people into the app, reach out to us in the community. We have always an open ear, and we're always open to working with active members from our community who want to help our project grow. Yes, excellent questions. Thank you so much for sending those in. And as always, this has been it for May. Gold consolidated under pressure from yields and the dollar. Bitcoin rebuilt momentum through ETF inflows. And real-world assets moved a little bit closer to regulated financial infrastructure. So this is a big plus. On our side, the concession has expanded. Recovery work is continuing, and the app has now sent more than $200,000 in PAXG paid out to users since launch. If you're following us, keep an eye on the next updates. Join, of course, our Discord, follow us on X, and subscribe, of course, to these monthly videos on our channel. And please bring your questions to the community, because the best ones, as you can see, come always back on camera, and we're gonna read them out loud and try to answer them. That is it for May. I'm Daniel, and I will see you again next month. Thanks for tuning in. Bye.